made 64% since. Enough said. You don't need to be born rich or be a financial genius or only pick winning stocks. In fact, that's not even possible. And I'm telling you this from experience because I did not grow up learning about money. I did not grow up learning about investing. I did not grow up learning about how this stuff works. Take a guess. Which one is me? Can you guess? That guy on the left is me over there. I grew up in a traditional Indian house where for me, the path for success was very simple. My parents said, Jasprit, you can either be a doctor or you can be a failure. You get to pick which one you want. I didn't grow up learning about money or know what investing was. I didn't grow up with investors in my family. And then I came across this book right here, Rich Dad, Poor Dad, by a guy named Robert Kiyosaki. Maybe you read this book. But this opened up my mind to this concept of investing, to this concept of assets. And so I started investing. My first investment was small. It was under $500. It was actually significantly less than that, but I don't remember the exact amount. So I round up to under $500. But slowly this started to get bigger. And I realized that I did not want to be a doctor. But my parents weren't very happy with that. So I made a compromise with my parents. I decided that I would go to law school part-time. That way, full-time, I could work on what I wanted to do, which was studying the most successful investors. And what I realized is they were not chasing investments. They wanted to own what would hopefully grow in value tomorrow. And I was very fortunate that I was able to then graduate law school, but I never needed to work as an attorney because I didn't have to. And that was when I wanted to share the things that I had learned, this investing education, this investing knowledge, because I wish somebody had told me this before and started talking about it on YouTube. And slowly, very slowly in the beginning, it started to get picked up. First, Kevin O'Leary from Shark Tank shared a collaboration video that we did together on his YouTube channel. Then I was invited by Robert Kiyosaki, the very author of the book, Rich Dad, Poor Dad, the book that started my financial journey, invited me to his office in Arizona. Dave Ramsey, you may know him. He invited me to collaborate in his office in Nashville. I was featured on Diary of a CEO. I was featured on Impact Theory with Jay Shetty. I was featured with Lewis Howes. And when I was starting to study this financial world, I was spending a lot of time in Yahoo Finance. And now, interestingly, Yahoo Finance has me on their site all the time. A lot of times they're not even actually interviewing me. They're just making up quotes that I say. But the best part about this is not the podcast or the news features. It's hearing the success stories from people like you who've told me how our content has helped change your lives. And this is where my question to you is, are you willing to commit the energy, which is the money, the time, and the research, into being a better investor? And I'm already seeing the yeses come in, so I'm not going to ask you to post it because I'm already seeing it come in. Beautiful. I love that. And this is where now, what we talked about in this part one is that there are three ways that you can invest your money. You can be a passive investor, you can invest with a financial advisor, or you can be an active investor. Our focus today is to be an active investor because it has the potential for the highest returns. It has the most risk, but the highest potential returns. And yes, you can do this without a financial background. So now that we laid the foundation, let's talk about research-based investing. And I'm going to take a quick sip of tea. Let me know if you're ready for this with some guac. All right. We got the guac flying in. Wow, beautiful. We have thousands of people in here right now. Maria gave me guac, Larry gave me guac, Ethan gave me guac, Sean gave me guac. I appreciate the guac. Remember, our goal is to understand how you can get slightly better gains, which can add up to significantly more wealth. And the way that you can do that as an active investor now is understanding research instead of investing on emotions. And what I mean by that is you might hear the news of things like the Trump administration is putting hundreds of millions of dollars into rare earth magnet production, or that AI is leading to thousands of job losses, or that the Trump administration has captured the president of Venezuela, or that President Trump signed an executive order on drones, flying cars, and supersonics. And when the majority of people see these things, they get excited or they get scared, they get very emotional. But I want you to see opportunity because I want you to start thinking the way that Wall Street does. Because what Wall Street does is anytime they hear about geopolitical tensions, or about how AI and technology is evolving, or about how there are new government policies, or about how there are new tariffs, they ask one simple question each and every time. And the question that they ask is, where is the money moving? Because as an investor, you want to invest where the money is moving. That's what active investing is all about. And when the majority of people are getting emotional and angry and excited, I want you to understand that Wall Street gets rich. And today I want to help you find those same opportunities as well, because the reality is the best investors aren't smarter than everybody else. They just know how to spot opportunities before the crowd. And no, it's not all luck. It's about your research, because your research is what gives you an edge. And I'll give you an example to show you what I mean. What most people do, and let me know in the chat if you've ever done this before, is they go onto CNBC and Reddit and they start researching headlines to see what stock they should invest in. And so now what you're doing is you're doing what everybody else does, because this is the headlines. I'm getting a bunch of yeses already come in, is you're going to the headlines to see what is the investment opportunities. I'm getting some no's, that's beautiful. But the problem is when you're trading based off of what everybody else is doing, what ends up happening to a lot of people here is you end up buying high and selling low. Well, if you're buying high and selling low, you're never going to have the chance to beat the market, let alone get the returns of the market. So if your goal is to get slightly better returns so you can have more wealth, well, that doesn't happen as well, because the reality is by the time it's on the news, the real money has often been made. And this is where, if you want to get ahead of the headlines, your research can help you stay ahead of the crowd. Let me explain. I'll give an example here. On June 11th, 2025, President Trump signed the executive order on drones, flying cars, and supersonics that he wants the administration to be pushing for more growth and innovation in these industries. We saw this as an opportunity, so my analysts went out and they immediately started talking to people in the drone industry to understand how this creates opportunities. Again, that executive order was signed on June 11th, and 10 days later, on June 21st, 2025, we published this report. Or what we said is one of the most ambitious of these drone companies is Joby Aviation, Joby, because of the innovation that they're doing. At the time of us publishing this report, Joby was trading at around $9 a share. Again, this is June 21, 2025. Fast forward a few months to August 12th, 2025, and now Joby is on the news. Jim Cramer is talking about Joby and how it's been a great stock on August 12th because they have been booming and their stock has been skyrocketing. That's the difference between investing based off of research versus based off of the headlines. This is the news, this is the research. And as of January 7th, 2026, the Joby stock was at about $15 a share, which is a growth of about 70% in approximately 7 months. And for the investors that were able to identify this trend early, like Zachary here, who said liked it after reading about it and bought it then, thanks for the information, it worked out well. Now, do you see why investing with research is essential to be able to make more confident investing choices as opposed to just investing based off of headlines? Ty says yes. Sandeep says yes. Kevin says yes. Carrie says yes. Yes, I love that. So what we talked about now is how active investing can be powerful if your goal is to get the best returns. Because if you just keep doing what everybody else does, you're going to get what everybody else does. But if you want to get slightly better returns, you have to do something a little bit different. And that's where your research can help you stay ahead of the crowd, because when you have the right research, it can help you now understand opportunities before they hit the headlines. Not to mention the fact that emotions are the enemy of profits, but you have to know, how do you actually identify these shifts? And this is where we get into key number 3. How do you actually identify these market shifts? Again, I'm going to take a quick sip of tea. Let me get some guac if you're ready for this, and then we're going to jump into key number 3. Beautiful. Thank you all for the guac. Carlos, give me guac. Jeff, give me guac. Sorry, I can't even keep up with all the chat going so fast. Again, our goal is to get slightly better gains. That way you can see significantly more wealth. Because if you get slightly better than the market, it can add up to a lot more wealth over the long term. Can we guarantee that? No, absolutely not. But there are ways to improve your odds. And this is where understanding that when you're investing based off of research, not chasing headlines, that's where the best opportunity is as an active investor. Now, I'm going to show you the number one thing that separates my firm's investing strategy from everybody else. It's helped us achieve some great results. And these are 5 proprietary market shifts that my analyst and I pay attention to. And I'm going to give you specific examples. I'm going to show you exactly what we're paying attention to, but I got to give you a disclosure, which is we're going to go over specific examples. We are not always right. Sometimes we're right, sometimes we're wrong, sometimes we are early because we're long-term investors. Investing is risky. You will lose money. Don't invest more than you're willing to lose. Our research has been audited, and based on our current investing strategy, based on 133 trades with an average win rate of 68% across winners and losers, our lead investor stock selections have beaten the S&P 500, outperformed the S&P 500 by approximately 6% from November 2024 to November 2025. I'm not giving you personalized advice. This is data-driven research. I'm going to show you some of our best results. These are not typical. Fair? Cool. Now let's get in. The 5 types of shifts that we pay attention to are, and I would recommend you write these down. Number 1, Wall Street shifts. Number 2, Main Street shifts. Number 3, innovation shifts. Number 4, broad market shifts. And number 5, government shifts. Let me explain each one. A Wall Street shift is when an investment institution or investment institutions like investment banks or venture capital shift where they are investing their money. Because if you can identify how Wall Street is investing their money before it hits the headlines, when they're quietly moving their money, that can create an investment opportunity because you know that these investment institutions are spending a lot of money to know where they're going to be investing their money. So if you can identify where these Wall Street institutions are putting their money, that can create an opportunity for you. Here's an example. In April 2025, we published this report where what we said is we identified a Wall Street shift because of tariffs, that more and more Wall Street institutions are investing in the supply chain infrastructure because tariffs are making businesses buy products differently. You all remember when tariffs first came out in early 2025, it changed which countries people were buying their products from, which changed the supply chain, which changed how companies were shipping their products to the United States. And what we saw is that Wall Street institutions were changing where they were investing their money. And what we said is that certain companies, such as Global Ship Lease, ticker GSL, has an edge here against their competitors because they have smaller ships that need less resources that make them more efficient. At the time of us publishing this, GSL was trading for a little bit under $24 a share. As of January 7th, 2026, it was trading for around $36 a share. This is about a 50% gain in approximately 8 months since publishing the report. Then there are Main Street shifts. This is now studying spending habits. Where are consumers spending their money? Where are businesses spending their money? And are they shifting their spending habits? Because if you can understand where spending is happening, you know exactly where the money is moving. And there are ways that you can study these types of shifts. And I'll give you an example. What we published in May 2025 is this. More and more businesses are working to monetize their data. We see this kind of in every industry now. The data monetization has become a big trend. And what we said is that Equifax is now using AI models to also monetize their data, and this could create an opportunity. At the time, it was trading for around $217 a share. As of January 7th, it fell to around $213 a share, which is about a 2% loss in approximately 8 months. And I'm showing you this because, again, sometimes we're right, sometimes we're wrong, but sometimes we're early because we're not talking about trading. We're talking about long-term investing based off of where the money is moving. You have to understand that. Then we have innovation shifts. This one is a fun one. This is when there's new technologies, new intellectual properties that cause a shift in spending. And you can study this in many different ways. Like you can study patents. You can study which companies are creating new technologies. That way they're actually creating something that could be the first to market. And this creates opportunities because if you can identify which technologies or innovations are new and proprietary, a company can have an edge here. I'll give you an example. In April 2025, we published this, that more and more Americans are banking digitally. This is called a neobank. And what we said specifically about these neobanks is that companies like SoFi, specifically SoFi, has the potential to become one of the major American banks because we were studying its growth in revenue, we were studying its growth in consumers, and so our analysts identified this stock as an opportunity in this shift. And at the time, SoFi was trading for around $11 a share. As of January 7th, 2026, it was at $27 a share, which is a growth of around 145% in approximately 9 months. Then there are broad market shifts. This one is when there is a macroeconomic change that causes a shift in spending. And by macroeconomic change, we're talking about a big, broad change. This could be things like cutting interest rates. It could be things like raising interest rates. It could be things like money printing. It could be things like stimulus or a recession. So a big, broad macroeconomic shift that affects an entire industry. And what we covered as an example is in October 2025, what we said is that data centers are using a lot of copper. And we are running out of copper. And what we then said is that our analysts went out and spoke to a number of mining, minerals, and metals experts over the last 6 months, and all of them agreed that a copper shortage is on the way. This was October 2025. And then we mentioned that you can get exposure to this through a copper ETF like COPX. At the time, COPX was trading for around $62 a share. As of January 7th, it was around $75 a share, which is about a 21% gain in the last 3 months since publishing. And then there are government shifts. And oh, baby, have there been no shortage of government shifts in 2025, and they're not going to slow down in 2026. This is when government regulations or government policy changes create a shift in spending. I said this before, but the largest spender in our economy is the United States government. And as an investor, you want to know where the money is moving. Well, if the largest spender in our economy is the United States government, and they're changing policies, they're changing spending, that creates opportunity. And that's one thing that was a very, very, very hot trend in 2025, and it's going to continue to be hot in 2026. I'll give you a few examples. In August 2025, we talked about rare earth metals. Now, rare earth has been a very hot topic recently, and I'll give you just a very quick summary. The United States imposed tariffs on a lot of countries, including China. And China is the leading exporter, meaning seller, of these rare earth metals. And these rare earth metals are just metals that you need for everything. You need them to build iPhones. You need them for energy. We need them in defense. So we need these metals in our economy, but we have been reliant on China to get these metals. Well, when we put these tariffs on China, China said, no more rare earth metals for you. That's a problem. And this is where the Trump administration has been working to rebuild that rare earth metal supply chain outside of China and in the United States. And what we said is that other companies are either spinning up or pivoting into rare earth minerals, but one of the most seemingly successful pivots is by Energy Fuels. So we said this back in August 2025. At the time, it was trading around $9.72 a share. As of January 7th, 2026, it was at about $18.95 a share, which is a growth of about 94% over the last 5 months. But we'll do another one because government shifts have been so popular. We talked about tariffs and how tariffs are going to change how businesses operate in 2025. But then what we said is that certain companies are going to be able to bypass this and potentially benefit from the tariffs, like Palantir, because they have so many government contracts already in place. That's what our analysts discovered, that they already had these contracts, multi-year contracts with the government, so they could bypass some of these tariff issues. At the time, they were trading at around $82, $92 a share. And as of January 7th, 2026, they were trading for around $181 a share, which is a growth of about 96% in the last 9 months since publishing. But let's do one more just because government shifts have been so wild. In August, we published this, that the United States Space Force is seeing more money. President Trump created the Space Force during his first administration. And then when the One Big Beautiful Bill Act, his tax proposal, was passed in 2025, what our analysts discovered is that in that bill, there was a provision giving more money to space companies. So they said this created an opportunity. In fact, what they went on to say is that one company that could benefit is Rocket Lab, RKLB, because they're one of the fastest growing rocket companies in the world. At the time, they were trading at around $43.98 a share. As of January 7th, 2026, it was around $84 a share, which is a growth of about 78% in the last 5 months. So now, are you starting to see the power of researching, more specifically researching market shifts rather than just chasing headlines? I'm seeing the guac come in. I'm seeing Navdeep say yes. I'm seeing Aaron say yes. I'm seeing Kirk say yes. Brian say yes. Since the answer is yes, my question then is, how will this new knowledge change your investing strategy? Are you willing to start researching market shifts like I showed you based off those 5 things that I talked about? And are you willing to let go of any other approaches that you might have been attached to in the past? That way you can actually see more success through researching these market shifts. And I'm getting a lot of yeses. Rhonda says yes. Dolores says yes. Timothy says yes. CM says yes. Beautiful. The reason why this is important, again, is not so you can see huge, big gains, because you don't need that. What you need is to understand that slightly better returns can lead to significantly more wealth. That's the goal, because if you can just do slightly better than 10% a year, it can add up to significantly more wealth if it's compounded over the course of your career. And this is where I want you to remember, our goal is not to just trade our money, it's to invest for the long term, but understand where money is moving. Because if you can know where money is moving through your research, it can give you an edge to get slightly better returns, which can lead to a lot more wealth. So what we talked about now is that number one, if you want to get better returns, active investing is a way that can give you better returns because you're taking on a little bit more risk for more potential returns, and slightly better returns can lead to significantly more wealth. Then we talked about how do you actually do that. The way you can do that is by using research to get ahead of the crowd. That way you don't get stuck on the emotion side, because if we just keep doing what everybody else does by investing based off on the headlines, well, you're going to get the same returns as everybody else. And if you're buying high and selling low, it becomes very difficult to actually see any real gains. And then to actually make that happen, to narrow in where do you do the research, we talked about studying market shifts. And the 5 proprietary market shifts that our firm has created are these right here. It is Wall Street shifts, Main Street shifts, innovation shifts, broad market shifts, government shifts. If you haven't written these down yet, I recommend you do so. This brings me to key number 4. What's going on right now in the new year in 2026? Because I know a lot of people now want to get their money right. They want to get their investing right. Where is the opportunity today through all of the changes? So if you're ready for this, let me get some guac. I'm going to take a quick sip of tea. Beautiful. I'm getting guac coming from everywhere. I love it. Again, our goal is to understand how can you get slightly better gains, which you can add up to significantly more wealth. And now let's talk about what's shifting now. But to understand what's shifting now, you have to understand how we actually gather this data, because otherwise I'm just giving you blind information. Because I'm going to be honest, it is hard work. The way that we find data, this is what we do, this is our structure, is number one, our analysts, because we have a team of analysts, actually go out and they talk to executives. We talked about how they would go out and talk to people like the drone industry based off of what's happening in the industry. When it came to copper, we were talking to copper experts in mining and other industries to understand what's happening in the industry. We would then go out and read company filings. This is a picture of one of our analysts in the New York Stock Exchange, because we need to know how companies are doing by studying their financials. And then we actually go out and attend trade shows. We attend government summits in Washington, D.C., because the best way to really understand what's happening is to be on the cutting edge. And the way that you can be on the cutting edge is not just through ChatGPT or Google, it's by actually going to the events, talking to the people that are innovating in real time, because that's what's going to give you that real research. Not to mention, we just spend a lot of time researching. We have a team that is doing this all day and night long. And what was interesting is one of our analysts was actually featured on one of the most recent CNBC ads. So now that you understand how do we do the research, let's talk about what we are actually keeping an eye on, and 3 shifts that my analysts asked me to share with you on this workshop today. Number 1 is European banks. This one is interesting because 1 year ago, in January 2025, this was one of our best reports. We didn't really expect it to do this good, but this was absolutely wild. About 1 year ago, we covered this broad market shift. Again, a broad market shift is where there's a macroeconomic change. And the European economy was struggling. We say that European economic instability has caused the governments in Europe to stimulate banks while they're currently undervalued. So what our analysts had realized is that European economies were struggling, but they were printing money and just funneling this money into banks, yet the bank stocks were still trading very cheaply. And what we also said is that European banks have learned through previous recessions how they can now overcome these downturns by studying American banks and how fast they've been growing. So we covered banks like Deutsche Bank and other things like that. And then we just got the news, like as of the last couple of days, that in 2025, the European banks saw their best year in history. And now the question is, what is this going to mean for 2026? So that's one thing that they're paying attention to. Number two is ballistic weapons. This one is another interesting one for a different reason, because number one, there's a lot of geopolitical tensions. We remember this. President Trump captured the president of Venezuela. Well, that's not all. President Trump just recently announced that he wants a $1.5 trillion dream military budget in 2027. Not to mention that we know that the Defense Department is now looking to add more artificial intelligence into their defense products, which can create an opportunity for some of these opportunities, which is why they're paying attention to ballistic weapons, as more money is looking like it's going to be going there should these proposals get approved, and then hedging against tech volatility, because tech stocks have been extremely volatile, not just in the last year, but in the last number of years. And right now, with the concerns about an AI bubble, how can you hedge against it? For example, some people like Ray Dalio say that we are now in the early stages of an AI bubble. Others are saying that there is no AI bubble. The reality is it doesn't matter what you think. We just know that there is tech volatility, and that also creates opportunity. So while most people are trying to fight about who's right, I want you to understand, how can you protect your portfolio and make money regardless of what happens? That's what hedging against tech volatility is all about. Now, I'm going to show you exactly how you can find which stocks are poised to benefit from these shifts in just a minute, but let's put this all together. The goal of today's workshop is understanding how you can beat the S&P 500, because if you can get slightly better gains over the course of your investing career, it can add up to significantly more wealth. And I'm not talking about averaging 50% a year or 20% a year. I know people on the internet like to talk about these things, but it's not realistic. We're talking about just 13% a year. If you can do slightly better, it can add up to significantly more wealth. So if you can beat the markets by 3%, it can add up to hundreds of thousands of dollars more over the course of your investing career. But the problem is investing is hard, and most people will lose money because you have to know your investing strategy. You have to know how to analyze a stock. You have to know how to not get emotional. You have to know how to navigate crazy economic times. Then you have to know how to manage your risk. But with the right investing strategy, you can be an active investor. Even if you don't have a finance background, you can start small. You can save time. You can be more confident, and you can work towards your financial goals. But it starts by understanding that there are three ways to invest your money. We talked about passive investing, which is where you're just putting your money into the markets, trying to get the 10% a year, which is great, but it's just not going to be enough for a lot of people, because with the cost of living growing because of inflation, with the Federal Reserve Bank printing money like it's their job, which I guess literally it is, things are getting more expensive. And the people that are not investing are going to slowly fall behind. So you do need more money. You can work with a financial advisor, which is, again, a great option for some people, but it's expensive. And some people just don't want to pay those fees. And if you don't have a ton of money to invest, you might not see the returns that you want. And then finally, you can be an active investor. That was our focus today. This is when you're investing based off of research to find where the money is moving. It has more risk for more potential returns, but we can mitigate that risk by doing better research. And our goal, again, is to get slightly better returns, which can add up to significantly more wealth, because if you can beat the markets by just 3%, it can add up to hundreds of thousands of dollars of more wealth over the course of your investing career. Then we talked about key number 2, that the best investors are not smarter than everybody else. They just know how to spot opportunities before the crowd. And it's not just about luck, it's about research-based investing, not chasing the headlines on CNBC and Reddit, because by the time it's on the news, everybody's already seen it. It's about understanding research. We talked about how in June, President Trump signed this executive order on drones. And then we immediately went out and started interviewing experts in the drone industry. And 10 days after That executive order was signed, we published a report on how our analysts believed that the Joby stock was primed to benefit. A few months after we published this report, Jim Cramer on CNBC is talking about the Joby stock and how it's booming. That's the difference between investing based off of research and news. This is research, this is news. And over the last 7 months or so since publishing, the Joby stock has grown about 70%, and the investors that understood this were able to benefit because of it. Then we talked about now, research is important, but where do you actually research your money? Because you need to know how and where to research. And we identified the 5 proprietary market shifts that my firm at Market Briefs Pro studies. We study Wall Street shifts, Main Street shifts, innovation shifts, broad market shifts, and government shifts. A Wall Street shift is when you see a change in spending habits by Wall Street firms. If you can identify quietly where these Wall Street firms are putting their money, it can create an investment opportunity. I gave you the example of how our analysts discovered that these Wall Street institutions were quietly moving their money into new supply chain companies as tariffs were happening, because they knew that companies were shifting how they were shipping the products into the United States. And the global Shipley stock that they recommended had gone up by around 50% in the last 8 months since publishing the report. Then we talked about Main Street shifts, which is understanding where people and businesses shift, where they spend their money. Again, your goal as an investor is to identify where the money is moving, because that's where the investment opportunities are. And we talked about how Equifax is in that business of trying to mine data through AI. And what we saw is that over the last 2 months or last 8 months, the stock had fallen by around 2%, because sometimes you're right, sometimes you're wrong, but sometimes you're early, because our goal is to be a long-term investor. Then we talked about innovation shifts. This is when there are new technologies or intellectual properties that cause a shift in spending. And one example that we talked about here is banking. More specifically, that more Americans are wanting to bank digitally with neobanks. And our analysts said that because SoFi's revenue has been growing, they identified this as an opportunity because it has the potential to become one of the major American banks. And over the last 9 months since publishing, it has gone up by around 145%. Then we talked about broad market shifts. This is when there is a macroeconomic change, a broad change that changes spending across an entire market. We talked more specifically how more and more companies need copper due to the growth of AI, but there's a shortage of copper, and how the COPX ETF could benefit. And over the last 3 months since publishing, this ETF has grown by around 21%. Then we talked about government shifts, which is when government regulations cause a shift in spending. And this has been, well, a very popular shift, not just in 2025, but it's going to accelerate in 2026. We talked about rare earths and how energy fuels, the UUUU stock, could benefit. In the last 5 months since publishing, it's gone up about 94%. We talked about how tariffs are going to impact certain businesses. And what our analysts identified is that Palantir has some strong government contracts which can allow them to bypass these tariff restrictions, or at least bypass some of these tariff pains, rather. And in the last 9 months since publishing, their stock has grown by around 96%. Then we talked about the new Trump tax plan, the one big beautiful tax bill, and how there's more money going into space and rockets. And what our analyst said is that Rocket Lab is one of the fastest growing rocket companies in the world. And in the last 5 months since publishing, this stock has grown by around 78%. Then we talked about what we're watching today, which is more specifically, our analysts talked about European banks because of the shift that we saw in 2025 that we covered a year ago. They talked about ballistic weapons with the new geopolitical tensions, not just new, but the existing and growing geopolitical tensions, and with the Trump administration wanting to invest an additional or a $1.5 trillion budget in 2027, and how to hedge against tech volatility. This is what they're publishing on January 17th, 24th, and 31st specifically. But understand the opportunities are already always changing. And I have total confidence now that you could take everything that we covered today and apply it to your own investments on your own today. With the information that we've covered in this investor workshop, along with your own resources, I am confident that you could go out and start investing the way that many would not be able to. And if that were your only option, you would still be off to a great start. But what if there was another option? An option that allowed us to go at this together. A chance to go deeper than just one short hour on one fast-moving workshop, just this one time? What if my team played an active role in your research every single week, and we took responsibility to provide you with the very best research and had an obligation to provide this data to you? How would that make things different? Do you think in this situation, we could empower you with any and all resources at our disposal to help you be more confident with your investments? If I had such an option for you, would you love to hear more about it and what it could do for you? And that's why it's with great pleasure that I introduce you to Market Briefs Pro, the new and improved version. I love seeing all the guac and the yeses in the chat. Again, Market Briefs Pro is our exclusive weekly research reports where every week my market analysts study hidden investment opportunities before the crowd, and they deliver it to you in a report that's easy to understand and read. And they're doing real field work. They're talking to industry experts. They're attending trade shows. They're going to government summits at Washington, D.C., and they're actually testing products to be at the cutting edge of information. And then they deliver this report to you every Saturday morning. It is Wall Street level research that anybody can understand. And they're focused again on these 5 shifts: Wall Street shifts, Main Street shifts, innovation shifts, broad market shifts, and government shifts. And this is what they look like. It is an email filled with images that's written in plain English that explains which stocks we believe, or my analysts believe, are going to benefit based off of this shift. One member here says, the amount of research that goes into this app each week is incredible, more than worth the price. I still can't get over the value provided in each Market Briefs Pro article. I feel so lucky to have found this. Our Market Briefs Pro reports break down 50 plus hours of research into a 10-minute weekly report that you can read on your own time. Another member said this: so much value. As somebody who has no knowledge of how the stock market works, having this system has provided me with some tremendous insight and also helped me starting the process of being financially educated. I highly recommend this app. The value it provides in regards to the financial market is beyond words. And the way that you can access this is, number one, you are going to get these reports emailed to you every Saturday. And we also, new information, we just, as of last week, launched our brand new app called Briefs Finance. It's a brand new app, and you can now listen to and read all the reports directly on our app. It is an amazing app. We spent a lot of time building this. And now you can access everything on your desktop, tablet, or mobile and read it or listen to it in whatever way that you want. Rafael emailed us saying this: I'm sorry for the late response. Just wanted to say how much I've been enjoying this community since joining. One of the first things I did was open a brokerage account, and I started investing some of the stocks and ETFs highlighted by Market Briefs Pro. So far, my portfolio is up already 10% in less than a month, and I'm really excited to keep learning and growing with the community. Now, if you have been looking at purchasing investment research before, you know that it's expensive. Wall Street firms charge $5,000, $10,000, $25,000 plus for similar types of investment research. But our goal is not to be Wall Street. We want to do something different. We used to charge $2,500 a year for access into our Market Briefs Pro reports. But because we've been able to grow, we've also been able to reduce the price. The fair price, I think you would agree, for Market Briefs Pro is $1,000 a year to get access to this level of research every single week for 52 weeks. But my goal isn't to be fair either. The retail price for Market Briefs Pro is $699 a year. But because you were watching this investor workshop, you're going to get a special discount today, which is our special workshop price of $499 a year. That's less than $1.40 a day. So if you're drinking coffee every day at Starbucks, this is cheaper than that. Now, I know what you're thinking, but Jaspreet, if this information is really so good, why don't you just use this information for yourself, right? Well, I do. We here at Briefs Finance have our own Briefs Finance Fund, where we invest money based off our own Market Briefs Pro reports. Now, we are investors. We are not money managers, and we are researchers. So you cannot invest into our own fund, but as a Market Briefs Pro member, you will get monthly Briefs Finance Fund updates. That way you can see what we're buying and selling based off of our reports. And this chart right here shows you the Briefs Finance Fund versus the S&P 500 over the last 30 or so days. The S&P 500 is the green line. The Briefs Finance Fund is the blue line. And yes, we use our Market Briefs Pro research to guide our fund decisions. So yes, we put our money exactly where our mouth is. One member, Karandeep, said this. Hello, everyone. So based on the Market Briefs Pro report as of October 2025, I decided to invest in copper, specifically the COPX ETF, bought it around 58. My portfolio is looking great. Excited for growth in the long run. Now you might say, well, Jaspreet, do I have to wait until Sunday, Saturday to start researching investment opportunities? Well, no. If you join today, you're also going to get a free bonus. I told you I'm going to have an amazing offer today. I want you to stick with me because you're going to see something really amazing. Our Market Briefs Pro archive. This way, you don't have to wait until Saturday. You're going to be able to read and listen to all of our previous reports. You can do it on your own time, at your own pace, and start identifying investment opportunities as soon as you join Market Briefs Pro. Alex says, Market Briefs Pro is an amazing tool that saves me a lot of time in doing research. It has topics ranging from finances, the economy, market trends. The videos are engaging, informative, funny, and brief. The app is also user-friendly. This has become a part of my daily morning routine as I get ready for work, drink my coffee, and listen to the latest news about the market. Now, you might say, well, Jaspreet, I don't know how to invest. Well, when you join today through this special workshop, you're also going to get access to Briefs Academy, which is a free bonus. This is a full education platform with 6 journeys that we call classes to get you up to speed as an investor. We have topics on building wealth, stock market investing, real estate investing, investing during a recession, and more. And you're going to get full access if you join Market Briefs Pro through this workshop. Jeanette says, just wanted to say that I really appreciate the detail and the education provided through the catalog of courses on the site. As a newbie, these resources are invaluable. Currently, I'm working my way through each of these videos, and with each one, I'm gaining confidence. This pro team has done such a great job, and I would encourage them to continue their education efforts, especially for those of us who came into this community knowing nothing about investing. And we have an entire program, entire class on stock market investing, from laying your stock market foundation to passive investing to active investing to knowing how to maximize your profits. Like Anna said, a month ago, I decided that I'm going to stop working full-time at 55. So during the last 2 weeks, I've set up different buckets that we teach to make it happen. I'm in better shape than I thought. I'm celebrating with you because everyone else thinks I am crazy. Well, let me go through the journeys very quickly because you're going to get all 6 of these classes. You're going to get the Climb to Wealth journey, which is going to lay your financial foundation on how you can start managing your money and building your wealth. Then you're going to get a class on how do you build wealth through a recession. You're going to understand the science of a recession. You're going to understand how you can use history to predict the future, because I am a nerd when it comes to financial history, because while history doesn't exactly repeat itself, it does rhyme. And you'll see how to find opportunity through these recessions, because recessions create some of the best wealth building opportunities in the history of time. I'm the one that's teaching all these classes. If you're interested in real estate investing, there's a full curriculum, full class on real estate investing where I will teach you step by step how you can get started as a real estate investor. Everything I teach is through my own experiences, not from theory. We have a class on cash flow investing because I love investing for cash flow. You're going to get access to this class as well. We have a full class on mastering the stock market. That way you can understand how you can invest your money into the stock market. And we also have a class for those of you who are interested in starting a business that I call the Zero to Digital Entrepreneur Mini Journey that will show you if you're interested in starting a business, which you can get in that as well. Dalton says, Jaspreet and his team have completely flipped the script on how my family looks at finances. We've went from a life of debt to financial security through our education, and we are now moving into the investment side of finances. I've been able to break generational financial patterns with my family and have taught my sons how to make intelligent moves with finances and set their life up to be world disaster proof. I highly recommend purchasing a membership and joining the team. Now you might say, well, Jaspreet, what if I have a question or an idea? Well, you also get access to our moderated community as a free bonus. This is where you're going to get real-time alerts. You can share your wins. You can ask questions, discuss investing ideas, because people are active in this app, and you're going to see real-time alerts from our team daily in here as well. Like Vineet says, I just paid off my house loan and my credit card debt. We have another member saying that has anybody invested into this stock right here? Ed says, thanks, Jackson, for the special report on tariffs. And then we have people that are laying out entire investing strategies with comments, with details, because that's how active our community is. Now you might say, well, Jaspreet, I don't have time to keep up with the markets. Well, you also get access to our Market Briefs in audio. We publish a report every day called Market Briefs, which is our free daily newsletter. But when you join Market Briefs Pro today, you're also going to get access to the audio version of this newsletter. That way you can listen to it on the go. Like Darin says, I read your newsletter every day. It's one of the best out there. And this member here says, your newsletter is the chef's kiss. Literally so good. The best one I've gotten. Very informative and keeps me in the know. If you're new to investing, it is worth getting. So here's what you're getting with Market Briefs Pro. In the special New Year offer, if you want to see how you can improve your research as an investor in 2026, you're going to get access to Market Briefs Pro, plus our monthly fund updates, because yes, we put our money where our mouth is. You're going to get bonus number 1, which is the Market Briefs Pro archive. You're going to get Briefs Academy, which is our education. You're going to get access to the community, and you're going to get Market Briefs and audio. Now, you might be wondering, well, what do top members experience after they join Market Briefs Pro? And it could look something like this. By day 7, you are going to receive your first Market Briefs Pro report because you're going to receive it on Saturday. Then you'll start to see the markets the way the top investors do. And by day 7, you will have introduced yourself in the community and started to engage with other investors. By day 21, you will have more clarity on where money is moving in the markets, and you'll understand why certain stocks are moving up versus down. By day 30, many members have identified an investment opportunity that they like, and you'll feel more confident to make an investment based off of data as opposed to just headlines. By day 90, many members have taken action on putting their money to work, and you'll feel more relief because you can invest based off of data as opposed to just emotion. Then 6 to 12 months from now, you'll start to see the results of being a more confident investor, and your friends and family will have to do a double take because they were not going to recognize you. This is one of my favorite comments that we get is, Jaspreet, my family doesn't recognize me because of how I change when I talk about my investments. And the goal is that 10 years from now, you'll start to see the compound effect of these principles in play because you'll be a more confident investor and you'll know how to research investments better. Bianca sends this email. Dear Briefs Pro team, thank you for reaching out and inviting me to share my thoughts. As a relatively new investor, I must say that I'm consistently impressed with the wealth of information and educational content you provide. I'm just starting out, and I found everything incredibly accessible and easy to understand. The reports are comprehensive yet digestible. Briefs Academy has been an invaluable research. I'm genuinely learning a tremendous amount, the service making me feel much more confident in navigating the world of investing. Thank you for providing such a valuable platform. Now, the real game changer here for our research is our boots on the ground, because you're going to get these 52 weeks of exclusive weekly reports where my market analysts are studying investment opportunities. They are talking to industry leaders. They're attending trade shows. They're going to Washington, D.C., attending these government summits, and they're testing products to write these reports. It's a lot of work. And then it's delivered to you every Saturday morning. It's Wall Street level research that anybody can understand for a fraction of what Wall Street charges. And this isn't about predicting stock prices or claiming to have a crystal ball. Anybody who promises to do that is lying to you. It's about giving you real research backed by data. So if you find an opportunity you like, you can make a simple adjustment to your portfolio in minutes. Like Gary said here, anybody enjoying the explosive gains in the last 2 days? Can't remember when you guys covered this one, but it's looking sweet as of late. Again, this isn't about what you'll have, but it's more of who you'll become. Because now you can enjoy waking up on a Saturday morning and reading about market shifts. You'll feel smarter about talking about investment opportunities because you'll have more research. You'll be able to stay more calm when others are panicking about market downturns. You'll be able to experience more relief because now you have data to back your investing decisions as opposed to just headlines. And you have more of a strategy to build wealth, to build your dream financial life. But the real thing that makes Market Briefs Pro different are our members and the successes that our members have had. Like this member said, this is my go-to for trends and education. I learned so much from Jaspreet and his team. It's giving me the courage and confidence to step into new ways of investing in gratitude. Again, this is everything that you get here. The way that you can get the link is by going to the resources button. You're going to get the Market Briefs Pro reports, plus our monthly fund updates, plus bonus number 1, the Market Briefs Pro archive, plus Briefs Academy, plus our community, plus Market Briefs and audio for less than $500 a year. That's less than $1.40 a day. Marvin says that the content was weighty, delivery was manageable, entertainment was on par, lessons are everlasting. How does the Briefs team do it? What are these people made of? They clearly get research, human behavior, and Jaspreet Singh's vision pretty well. It seems as if he sat down and did this all by himself, a telltale sign of them being a cohesive group. I'm so inspired. I think I can take on the weight of the world. Again, signs of a great leader. Thank you, Marvin. Now, I hope we can start to see that the value in MarketBriefs Pro is worth way more than the price. I told you that you will know if MarketBriefs Pro is right for you. And for the people that it's right for, it's going to cost you more not to join. But I'm still not done. I really want this investment to be a no-brainer. And because it's a new year, we're going to have a special bonus on top of everything that I just talked about. Number one is our wealth building masterclass. When you join today, you're also going to get access to 5+ hours of additional wealth building education of how you can get started building your wealth, stock market investing, real estate investing. These are recordings of old coaching lessons that I used to do. You cannot purchase these anywhere, but you're going to get access to these recordings when you join MarketBriefs Pro today. You're also going to get 2 recorded lessons from my accountant on how you can optimize your taxes and pay less money in taxes legally. These are pre-recorded. If you've ever worked with an accountant before, you know how expensive that it can be. This you cannot purchase anywhere, but you're going to get it free when you join MarketBriefs Pro today. And no, it's not available for sale. And finally, you're also going to get a wealth protection lesson, 1 recorded lesson from an attorney on estate planning. That way you know how you can protect your assets, because as you grow your wealth, you want to make sure that you can protect it as well. So here's everything that you get when you join today. You're going to get MarketBriefs Pro, plus our monthly fund update. You're going to get the MarketBriefs Pro archive. You're going to get Briefs Academy. You're going to get the moderated community. You're going to get MarketBriefs in audio. You're going to get the wealth building masterclass, the tax optimization lessons, and the wealth protection lessons. Bonuses 5, 6, and 7. You cannot purchase anywhere. I think easily you could say that these are individually worth more than $500 each, but you're getting them all for free here. After this workshop promotion, you're not going to be able to get all these bonuses, and the $499 discounted price is going to end, and it's going to go back up to $699 a year. If you are interested in enrolling, the way you do that is by clicking the resources button. You're going to go onto this button right here, click join now. When you do that, you're going to get this prompt. Click OK. Go onto the sales page. You can click become a member, enter your information and credit card, and then look out for an email in the next 60 minutes. Give it some time to process and actually give you access into our Briefs Finance app, because we've been getting a lot of orders today. And then let me know when you join. Once you join, let me know in the chat. That way